Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about the return on investment, or ROI, of Bitcoin after the halving. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, the halving for Bitcoin occurs approximately every 4 years. It's not quite that, but approximately every 4 years. And so we have halving cycle 1, 2, 3, and 4. We'll first look at the ROI after the first halving cycle. You can see that shortly after the halving, there is a surge in the price of Bitcoin, followed by kind of a lull in the market, and then one final surge at the end of the cycle. And then, of course, we got the bear market. After halving cycle 2, we actually saw an initial sell-off in Bitcoin, right? And then it took time to then get going. What's really interesting is that halving cycle 1 and 3 are similar in the fact that they did not experience any drop below the price they were on the day of the halving from that point throughout the rest of the cycle, right? You can see that they basically just went up after the halving. But cycles 2 and 4 both had a drawdown after the halving, about the same amount, to about 15-20%. Now, after that, you can see that halving cycle 4 was doing a pretty good job of tracking halving cycle 2, that is up until about January, right? So in January, we saw these two things diverge. Now, of course, Bitcoin has gone on to put in new all-time highs, but it hasn't really tracked the prior cycle, at least not so far. You can see one of the interesting things is when you overlay all of these. Well, if you overlay, let's look at the last two, they ended about the same time, right? So halving cycle 2 ended about 525 days after the halving, and then halving cycle 3 ended about 546 days after the halving. Currently, Bitcoin is on about day 439. Okay, so it does give you an idea of how far the last two cycles went before the bear market actually began. So again, about another 100 days, give or take, is how long in time the last two halving cycles went before we got our fairly standard bear market in the midterm years. I just think this is an interesting way to look at the data, because it also shows you the thing that everyone always says isn't going to happen this time. And I've even had some, pretty smart people tell me why this cycle was not going to be diminishing returns. And even last cycle, they said, why diminishing returns would not be a thing. And of course, they get the accolades and whatnot. And of course, diminishing returns is not a theory that a lot of people are going to like to hear. But it does go to show you that diminishing returns every cycle is and has been a thing, right? It has been a thing. It still is a thing. And it's just something to consider, because what a lot of times happens, if you guys remember last cycle, at the end of it, everyone was calling for 300K because they thought it was going to give the same returns as the cycle before. And I'm afraid you could see the people making the same mistake this cycle as well, where they call for astronomical prices because they think it's going to mimic the last cycle, when in reality, we have diminishing returns. Again, it's not a popular theory, but all Bitcoin pairs bleeding was not a popular theory. Bitcoin dominance going up until QT ends was not a popular theory. ETH going home was not a popular theory. Just because they're not popular theories doesn't mean they're not going to play out. So looking at the chart like this, I think it does go to show you how diminishing returns has been a thing. And it doesn't mean that you can't, that prices can't go up. I mean, if Bitcoin goes up 7x, 8x, 9x, 10x, that's still a lot of money to be made, right? From the bottom. And Bitcoin is already up, 6 or 7x, I think, from the bottom. From the halving, it's not even up 2x. To give you an idea, at this point in the last cycle, Bitcoin was up about almost 4x at this point. And the cycle before that, Bitcoin was up 5.5x at this point after the halving. So again, diminishing returns, unfortunately, is a thing. I understand people are like, well, you have the strategic reserve and you have ETFs and all. That's true, but remember, as the market cap grows, it takes exponentially more volume to move the price, right? It just simply takes a lot more volume. Doesn't mean the prices can't go up. It just means that you might be better off tempering expectations and then being pleasantly surprised if diminishing returns is ever not a thing anymore. At some point in the distant future, maybe we'll go off on a different path, right? But we just haven't yet. And at some points during the cycle, you can see that the ROI is above prior halvings, but inevitably by the end of the cycle, it seems like it always falls below, and then you end with diminishing returns. 2 cycles ago, the ROI, well, actually, let's go 3 cycles ago. 3 cycles ago, the ROI at the end of the cycle, assuming you take that as having cycle 1, was about 92x, right? And then the next cycle, it was about, from the halving, the next one was about 30x, so about 1/3. Then last cycle was about 8x. So I guess about 1/3 again. And then finally, this one so far hasn't even made it to 2, but it doesn't mean it won't. It just means that as the cycle goes on, right, as the year goes on, just keep an eye on this chart to figure out where we may be in the cycle. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.